Good morning and happy 50K to you all. It's nice to see our old friend we haven't seen since December of 2021, believe it or not. My name is Ben Floyd and I'll be your host for today. We have got a cracking lineup as usual. We've got a market update from Josh, who's going to run through some changes at CoinDesk and some updates on the ongoing legal battles we have in the space. David's going to run us through the macro, including the important inflation data we have today. Greg's going to take us through flows and also some positioning and open interest in the derivatives markets. And then we've got Sid, who's going to give us a Farcaster update, including a potential connection with Solana. Sid, I'm going to bring you in here. You are an OG, and I think it's probably fair to say you have a slight degen streak in you as well. How does it feel 50K now versus December 2021? Obviously, it's potentially slightly different times of the market.
Yeah, it feels very different now. Actually, to be honest, last when we were at this range, ETH was at 4K, Solana was at 200, Luna itself was at 100. So we were coming off the back of an epic altcoin rally that year, and this time around it's much different. We're just in the initial stages as far as it looks like. ETH is still 46% below its all-time high, so feels much different, feels much more Bitcoin-led, and feels like we're at the initial leg.
Wow, adding those numbers in is amazing. To think like Luna was 100, Sol at 200, and ETH, as you said, a lot higher. That's kind of incredible. I was reflecting with the guys yesterday. It also feels kind of just like a non-event. It's like people are like cautiously optimistic as opposed to excited. Which is also a big change. I guess from like an infrastructure perspective, like if we compare, like how does that look to you in terms of DeFi specifically?
Yeah, in terms of infrastructure, we have had so many more chains, especially L2s, come up over this bear market, and then also from the wallet and overall evolution of the ecosystem, we have a lot more base level infra built. We'll cover this later in the call with EigenLayer, restaking, account abstraction, and just layer 2 developments in general, and then also Solana updates on the developer front. The ecosystem as a whole has evolved, but now it's kind of ripe for the applications that kind of drove last cycle, which was DeFi and NFT applications. We'll see what those apps are this time around to see how they leverage this infrastructure.
Looking forward to hearing more in a second. But before we get into it, some quick housekeeping. Don't forget to like and subscribe if you're on YouTube, Spotify, Audible, however you listen to or watch the show. If you are watching, don't forget to scan the QR code to get all of David's fantastic research. If you are listening, that will be in the show notes as well. But let's get right into it. Josh, let's have a quick market update, please.
Yeah, thanks, Ben. The big story is, of course, that BTC traded through the 50,000 level on Monday morning, hitting levels, as Sid just said, last seen in December of 2021. I know, Ben, you just mentioned that things feel muted, but experiencing these levels as a first for me is actually really quite exhilarating, and I'm loving it. So just to remind listeners, BTC price action, touched levels as low as actually 39,184 on Jan 23rd. Really, as the ETF launch largely in the near term became a sell the news story. So looking at some of the world's most valuable stocks, actually BTC's market cap, I call it close to $1 billion at $980 billion. I'm sorry, close to $1 trillion rather, is really a stone's throw away from the likes of Meta at $1.2 trillion. Just a fun metric in my opinion. But wow, really what a difference a short 20 days can make. And really this bullish market sentiment is evidenced not only in BTC, but also in ETH showing legs and running up 14.8% in the last 7 days alone, to rise convincingly above the 2,600 level, even notably, I think, outperforming BTC on Monday by about 2.4%. Popular alts are also trading higher. If we take a quick look at markets, we see that Sol is up 13.3%, Cardano up 7.7%, AVAX up 12%, Link up 13%, etc. And even really the large unlocking Arbitrum showing strength, trading up 16.3% on the week. A few more details here, specifically on Arbitrum, given its massive size. In 31 days on March 15th, 1.1 billion ARB tokens are set to unlock, which is really a meaningful unlocking event relative to the 10 billion total token supply. Currently, I believe, unless I'm wrong on this one, that the Dow Treasury accounts for the large portion of the circulating supply. So this unlocking event, really unlocking the first time for investors and advisors, will be a large liquidity event and one that we are, of course, watching very carefully.
Sid, we'd love to bring you in here. You're obviously kind of keeping an eye on things on chain. Like, what should we be looking out for here? And are there any other protocols that also have kind of unlocks coming?
Yeah, so historically, unlocks have been, especially for larger protocols, have been almost a meme of sorts, where there's this meme of the bullish unlock, especially when unlocks change hands before they actually happen. But in terms of ARB specifically, we also have a pretty big distribution event happening on Optimism with their RPGF, their retroactive public goods funding program, beginning distributions this previous week. It's going to go on for the foreseeable few months to different projects, and projects are going to use that for development funding. So we'll see how that pans out. But both of these have been the stalwarts of L2 tokens in recent times. So, and they've been performing pretty strong. And even with Arbitrum, we've also had a pretty big circulating supply increase over the past few months, which folks may not be aware of. They've been running their STIP program, which is basically incentives that they've been giving to leading dApps on Arbitrum to incentivize user growth. So I've seen some folks running numbers on this, where on average they've been spending around $7 for every additional dollar in TVL that the chain itself has gained, which is interesting, which is pretty egregious. But arguably other metrics like daily active users and transaction volumes and stuff have definitely picked up.
So it's interesting. It feels like this week, last week, week before, we've been talking about unlocks across both Solana and Ethereum. Sid, I'm curious, is this the time where we're going to start to see a lot of unlocks, and maybe some projects have held back, waiting for price action to improve before they start to release tokens?
Well, to be honest, the unlock schedules, at least for the larger projects, has been kind of preempted. They've published these schedules ahead of time. Coincidentally, it's coinciding with this price action run up. What is interesting though is new token launches. We've seen even over the past few weeks, Dimension, AltLayer, several multi-billion-dollar launches happen, and I'm sure we'll see several more over the coming weeks. Which is kind of opportunistic from the development teams to kind of launch at this time when user interest is high and potentially the token can pick up as soon as it launches.
Interesting. And Josh, like, what are we seeing? I guess in these some of these names as a result of these potential catalysts coming up.
Yeah, it's really interesting. I think Sid mentioning the fact that there's actually a fundamental driver for why Arbitrum in particular potentially trades so much, because we've actually fielded that question on the desk. These are tokens that have the lion's share of circulating supply that's addressable is actually still locked up. And I think the question becomes, well, what's driving all this churn? And to hear that there's actually a fundamental case for why, hey, actually more tokens are coming to market, that the Treasury DAO is actually releasing more tokens, that actually makes a lot of sense. From a price perspective, I think, one thing that's been interesting is that, if you take a look at how large unlocking tokens in the past have performed, if we use Aptos, for instance, as a recent example, given that was a high profile, really a huge unlock that also is still ongoing. But on day one, I think it was like $20 million, call it, give or take, that unlocked. And we really saw that prices jump from, call it, closer to $7, and I recall through $9. So, one thing to note is that, there's a couple lessons here. It could be that the market in general is just becoming more mature and potentially pricing these things better, and the liquidity kind of discount, call it, rather. And I think the other could just be that, when the market in general is lifting higher, that really fundamental, price drivers seem to kind of be thrown out the window as well, and that all ships rise higher. Rise higher as the tide lifts, or however we say it. Watch that. But nonetheless, it is interesting to see, and I think we'll continue to watch for large unlocks, including Aptos, including SWI, including the ongoing ones of SWI, including Arbitrum, and just seeing how these tokens respond.
Yeah, definitely interesting dynamic to watch as the space evolves. What else are we keeping an eye on, Josh? Yeah,
of course, we're going to go back to ETF flows. If we go to our next slide, you'll see there, our audience will see kind of what the flows look like. But IBIT, the iShares Bitcoin Trust, and FBDC, Fidelity's Wise Origin Bitcoin Fund are really leading the pack here with flows above $3.7 billion and $3.1 billion respectively. And really, for those who are keeping track across all ETFs, I was actually astounded to see this. The net inflow number year to date is just a touch below $3.3 billion. It really looks to us that GBTC's flows appear to be slowing down here, with 1 month flows were higher than $6.3-ish billion. But really, if you look at the one-day outflow number, which was $51 million on Monday and $414 million cumulative for the week, things have really slowed down.
Interesting. And Josh, do you think that's kind of part of the reason for this kind of move higher and grind higher? People are kind of more comfortable with the outflows are slowing, and ultimately we're just having a load of additional fresh capital coming in.
Yeah, I think that makes tons of sense. I think that you'll continue to see kind of in large traditional media organizations such as Bloomberg, et cetera, will be reporting that, that large net inflow number. And I think the fact that GBTC selling really appears to be slowing down, of course, from just the fundamentals perspective, like that seller exhaustion kind of looks to be real. So from our perspective, it appears to really be that this ETF launch was actually immensely successful, and that you start to see a lot more fresh capital coming into the market. On the desk, we of course talk about other fundamental drivers for BTC, whether that's having, an accommodative monetary policy, et cetera. But without a doubt, I agree with you.
Yeah, it's interesting. I mean, because we were talking about this, it was going to take time for flows to build and for it to really have an impact. But it's actually, we're like a month in, and it's already seems to be having an impact. And that's arguably before many of the large wealth platforms have even given it approval to get to clients, or financial advisors have been educated on it. So yeah, super encouraging. I was chatting with a client the other day, and this isn't my view, this was his view, but he was expecting all-time highs kind of in Q2 of this year, which I don't know, still feels a long way away, to be honest, but we'll see how that plays out.
One more thing to add there, but I think that you just hit the nail on the head, which was like there was discussion around LPL Financial, which of course controls tons of assets, that they're still not yet comfortable. So to see this, call it a month in, is actually incredibly, I think, constructive. And if, 6 months from now, 1 year from now, 5 years from now, as the platforms and everybody becomes more comfortable pitching BTC's place in client portfolios, I mean, we'll see what happens, but the levels look like something to watch.
I can hear some excitement in your voice there. I love it. Yeah. Right. What else have you been keeping an eye on?
Yeah, as noted before, I think we'll turn the picture to ETH. ETH is really picking up a little bit of steam here with news that Franklin Templeton filed an S1 registration for a spot ETH ETF. The street across the board seems to be quite mixed on likelihood of approval in 2024 for an ETH ETF, which is really, I think, more complicated by the fact that these providers are also looking to include a potential staking solution, which we imagine the SEC will spend some additional time mulling over. But in general, there was also news that the ETH validator entry queue jumped to its highest level since October 2024. So, these bullish headlines continue here. And with the percentage of ETH staked holding steady at around 25%, which is still a couple percentage points actually higher from where we were at in mid-January, we are seeing small signs of renewed interest in ETH, likely helping its performance here.
Interesting. And I'm curious, like, how you think about, and Sid would love your opinion here as well, around like EigenLayer, the growth there, and kind of how much ETH is locked up, and what that does to potentially help prices move higher.
Yeah, it's pretty interesting. EigenLayer is one of the largest projects in the space right now. They've been operating in a kind of regular cadence in terms of increasing the caps in terms of how much ETH is allowed to be deposited in their protocol. And recently, last week, they raised the caps again, and the TVL number shot up from 2 billion to it's now sitting at 6.5 billion. ETH price has also increased, so technically that's a 1.5 million ETH increase in the past week or so, which is pretty substantial for EigenLayer. And what's interesting here is EigenLayer accepts staked ETH deposits and various different flavors of staked ETH. So the Lido staked ETH TVL hasn't exactly gone up significantly in that period. What's interesting is just different flavors of staked ETH are being rehypothecated and deposited into EigenLayer. Specifically, there's this flavor called Mantle ETH, so METH, which has gone up. The TVL has gone up 72% in the last month, and 200K of the EigenLayer ETH increase, 200K ETH that is due to Mantle ETH being included. So a pretty interesting trend here in terms of providers competing for different sources of yield, and also EigenLayer points, which is what they're rewarding currently.
And with these EigenLayer points, I assume the assumption or expectation is that they're going to be turned into maybe some sort of other form of value in the future. I guess how are people gaining points, or what do you have to do to get points?
All you have to do is just deposit some flavor of staked ETH into EigenLayer, and then the time that you have deposited, it's a kind of time-weighted and TVL weighted allocation, where the larger your size and the more you stay deposited, the more points you gain, right? So, and currently points are, deriving some sort of value in the secondary markets, which is interesting to see, but it's all kind of guesswork to see what a point will be worth in terms of EigenLayer's token when they release it. It's not known how many tokens they will allocate per point. So that's the big, piece of guesswork that folks are doing. But they're trying to have comparables to other large projects with similar TVLs.
Interesting. And each time, it seems like they've been very responsible in their kind of growth. Each time they have a cap, and then they kind of reach that cap, and then they raise it again, and they reach that cap. Like, typically, how long is it taking for them to max out their cap each time they raise it?
It's been getting a little bit slower as it's reaching a bit of a saturation point, but it's close to being filled again, and it's been a week, right? So historically, it was as soon as a day, in terms of minutes, it got filled, and then it was a day, and then now it's kind of up to a week. So I think it's progressively getting longer and longer, but we'll probably reach a saturation point soon.
And I guess there's also like the scale is getting larger. Like, we're talking billions of dollars here, so it's not a small amount. And the first cap was, I think, 50 million or something very small.
Exactly.
Yeah, interesting. And I guess how should we think about EigenLayer versus, let's say, a Celestia, which has obviously got a token, it's listed. How do we think about those two vis-a-vis each other?
Yeah, so EigenLayer is kind of a generalized restaking solution. So it's kind of a overall protocol to serve other protocols who want to use staked ETH as a kind of validation mechanism. And then they have a subcomponent called EigenDA, which is their data availability solution. So Celestia is basically a data availability solution. So it's more EigenDA versus Celestia as comparable. And they kind of use slightly different technology approaches. EigenDA uses like data availability committees, and then Celestia uses data availability sampling. There's pros and cons for each approach, but it's kind of that's where they're competing. So EigenLayer is kind of a larger umbrella where it could address a larger scope of use cases apart from just data availability.
Interesting. And kind of back to ETH, how much ETH is currently locked? And what does that do? And Josh, would love to hear your opinion on this afterwards as well. Like, how much ETH is actually locked? Like, where is it locked? And then what does that typically do for the asset?
Yeah, sure. I'm happy to start. So I think ETH, from what we just saw, was I think closer to 25% of total circulating supply of addressable ETH is currently locked. And I would think in general, just that helps ETH pricing performance, given especially that when you take supply out of the market, just naturally the supply and demand characteristics improve, and that there's just this general view that with less supply in the market, there's just less selling to be done. So I would think in general that would just continue to be a bullish case. And I think relative to some of its other staking peers, at 25%, there's still a lot of legs to run.
Interesting. And Blast has been coming up a lot, Sid. Do you mind just running through what that is?
Yeah, so Blast is kind of combining these two narratives. Earlier we discussed layer twos. So Blast is a layer two where they're currently only accepting deposits of ETH, and then the ETH is natively staked in Lido staked ETH. So the ETH just gains yield passively, and then the ETH that users use on the L2 will always be passively gaining the yield. That's kind of their pitch to users, so they don't lose out on the opportunity cost of ETH base yield while they're interacting with L2 dApps on Blast, the L2. And the developers of Blast are also the same developers behind Blur, the NFT marketplace. So they're trying to have a more integrated linkage between the two, potentially have more dApps related to NFTs on that chain, and offer this staked ETH. So it has a kind of over $1 billion of TVL that's currently locked. And it kind of adds to this locked ETH component where we have 25% that's staked, all of this that's being restaked in EigenLayer, and then another $1 billion in Blast, and then several billion in other areas of DeFi as well, which are effectively locked and away from circulation.
Interesting. And on the blast side of things, is that something that other L2s could potentially implement? So rather than going to blast, you would get native stake ETH rewards via arbitrism, optimism, et cetera, et cetera.
Yeah, definitely. I think the key consideration there is security. L2s are making a choice whether to stake or not. You're trusting the setup of staking in terms of taking all the user funds on the roll up and then transferring it back to mainnet to stake. So it's a bit of a security concern potentially. If there's some sort of bug in that flow, it has a systemic downstream effects, right? So I think it's just individual choices L2s are making. Mantle, for example, has this METH product, but it's not the base token that they use to facilitate transactions on the Mantle L2, right? So they're offering it as a standalone product rather than the base transacting token.
Yeah, very helpful. Thank you, Sid. Josh, wrapping up, what are the last few bits you've been keeping an eye on?
Yes, sir. On the regulatory front, hedge funds will now file additional confidential information on the so-called Form PF, an SEC regulatory filing requirement really intended to ensure financial stability, including fund details for their crypto investment strategies. So while our business, we won't see fund filings, disclosures similar to stocks, it'll be interesting ultimately to see how holders' info on upcoming public filings, such as investment firm 13Fs, what additional color we can shine on additional holder types. What we're seeing here. And lastly, on the regulatory front, New York AG Letitia James is set to expand its suit against DCG, alleging that DCG defrauded investors out of $3 billion. Just to note, that number was $1 billion previously. So there's a bit more drama here on this one. But DCG did report positive Q4 results with revenues rising 59%. Lastly, on the headlines front, CoinDesk's new owner, Bullish, who completed its acquisition in November of last year, has reportedly changed its CEO and other senior management staff. We mentioned this because given CoinDesk's prominent role as a news organization within this space, we feel this one is important to take note of. I think that's it. Back to you, Ben.
Cool. Thanks so much, Josh. A lot going on as usual. David, over to you on the macro side of things. Inflation data today, what are we looking for?
Yeah, so inflation came in slightly above expectations at 3.1% versus the median forecast, which was 2.9%. I mean, overall, I think that this is something that a lot of our institutional investors can probably overlook, is my view. Some people are concerned that this is going to push the Fed into hiking later than what already is expected to be later than March, because I think Powell came in and suggested that March is out of the picture. May is the most likely scenario. But already you're starting to see people kind of push that further into June. I don't think that's going to be true, by the way. I think that the first cut is still going to happen in May, and I'm expecting 100 basis points of cuts this year.
Interesting. And I guess what else should we be looking out for ahead of May as a potential point for the first rate cut that might change that path? Obviously, inflation is one thing, jobs is another. Like, what are some of the other data points that we should be keeping an eye on?
Well, I think the real kind of picture is, like, are we exhausted with the soft landing environment, soft landing scenario yet? And I don't think we are. I think that so far what we've been getting in terms of the hard data has actually been fairly positive. Not so positive that I think would change the minds of the Fed, for example. I think that so long as we maintain this disinflationary trend, which we're still on, I don't think we've shifted. It's just, the pace of it has changed somewhat. I think for the most part, we're going to continue seeing that because the Fed doesn't want to create a problem like down the line by not cutting rates like sooner rather than expected, because that could potentially tip over into recession if they're not careful. So I think that they're going to remain cautious, but I think we're kind of over-indexing a bit to the hawkish members of the board who've been on the tape recently. You kind of heard from Michelle Bowman, for example, Lori Logan. These tend to be the major hawks on the board, for example. I think that we just need to be careful. Like, we haven't heard from too many centrists, and I think that view should dominate over the next few months.
And then I guess, how do we then connect this to crypto and maybe in the context of other data points that are crypto specific, whether it's a halvening or other things? Obviously, rate cuts are going to be good for risk assets, which should play through. But what else is going to help the crypto ecosystem specifically?
I mean, I don't think that this should be underestimated in terms of its significance. For one thing, like, we kind of mentioned DeFi earlier. I think DeFi activity is going to start picking back up in the first half of 2024, in part because we have the rate cuts. I think that once we see that, of course, cost of capital kind of goes down. But also, there's fewer kind of market neutral opportunities in this market than there were previously. Like on this podcast talked about the bases, for example. It's not quite as attractive as it used to be, or definitely even when you consider the capital requirements involved in the trade of doing the bases. I'm talking about CME futures. It's not quite where it used to be. So if you're a player who, frequently this trade, you might want to move into something else. And right now in stablecoins, for example, just doing stablecoins on DeFi, you can get upwards of 7 to 9%. That's double where it used to be about a year ago. So I think that if we look at this, that could be a strong value proposition for DeFi and DeFi plays. And also on the platforms on where that's played. And I'm thinking more like Ethereum, for example, but also Solana.
Yeah, that's certainly interesting, isn't it? There was a time where rates in TradFi were higher than DeFi, so it's interesting to see that flip reverse a little bit. Now, we all know Ethereum very well. Most know Ethereum very, very well in terms of what rates are available via Maker, Aave, Compound, etc. Sid, curious, we'd love to bring you in here. Looking across Solana and other chains, what are the yields there? And presumably they're a little bit higher, given you're taking on a bit more risk, but maybe not.
Yeah, kind of the stalwart in the Solana ecosystem is Jito. They famously kind of airdropped their token to the community earlier this year, and it was pretty well received. The current going rate there is 7.8%. They have 7.6 million SOL locked up. It's close to $1 billion and almost 100K holders. So it's become kind of a standard for the ecosystem. So slightly higher risk, but also it's become such a standard that it's become enshrined in the ecosystem as this term is often used with Ethereum and Lido. So I would say that's kind of the equivalent with Solana.
Awesome. Thank you very much for that rundown, Sid. Yeah, I guess given maybe Jito isn't quite as battle tested, it's a little higher risk, but certainly these protocols grow their TVL very, very quickly with attractive rates. David, anything to add there, or any other macro bits that we should be keeping an eye out, or research you've got coming out? I know you're speaking at our Scroll event later, which I'm looking forward to, but anything else you're keeping an eye on?
Yeah, I think that's going to be exciting to just explore a little bit more what's happening in the L2 space, because there's been so many prominent kind of releases. And I think a big part of it has to do with just performance price action in the markets, right? That's why a lot of launches have occurred very recently. Of course, Scroll's been launched in 2023. But otherwise, I would say on the macro front, I'm still kind of paying attention to what's happening with regional banks, really what's happening with commercial real estate. We've talked about these topics before. And also really still struggling with what's going to happen in China and the ramifications that's going to have in the broader global economy.
Cool. Well, as they get more clear, definitely want to hear your opinions on that. Cool. Thanks, David. Greg, flows. What's going on there?
Yeah, thanks, Ben. Happy to report that volumes on exchange are ticking up. I think we have a slide here. Yeah. So after the launch, we've talked about this quite a bit. Volumes fell off. We're now seeing them start to tick up again, which is a very healthy sign. What's not shown in this chart is really the distribution across the different tokens where we're seeing increased volume. It's not just Bitcoin. We are seeing interest in Bitcoin, but we're also seeing interest in ETH now, which is very good, and a lot of the better known altcoins. So that's Solana, a lot of the larger L2s, Aptos, SWI, and so on. And there continues to be really a dichotomy in the market. You have the more traditional asset managers focusing really on Bitcoin and now sort of moving into ETH, given that, as Josh said, there's some very large issuers filing for ETFs. The fundamentals do look good there. And then you have the crypto native folks that are really just focused very much on the longer tail, higher beta assets. So one thing I would add that I have noticed is that when we saw CME interest collapse after the launch, everybody was falling over themselves with these, very low price targets. It's going to be 30,000. It's going to be 25,000. Now we traded at 50 yesterday, and we're seeing the same thing, but on the upside. Very high price targets. I think it's very difficult to say, where this asset's going to be in the next week, month. What I like to do is just focus on the larger fundamental picture, and which is really a flows picture. We have an ETF that's gathering assets. We have likely some macro tailwinds this year. It's hard to say what it's going to do in the next week or month, but it does look constructive longer term.
Yeah, I agree with your sentiment there about people getting overexcited and like overly bearish. I think one thing that Brian, our CEO, always says is it's never as good as it seems. It's never as bad as it seems. And I think that's so spot on.
Yeah, absolutely. And from a trading standpoint, you just want to, don't have so large of a position on that, you get stopped out, when you get hit a couple bumps in the road. It's very hard. You just want to stay in the game.
Yeah.
But another, I think, good data point that we've seen is CME open interest for both Bitcoin and ETH is climbing again. So these charts show CME open interest in token amounts. So we sort of control for price action. And we're not at all-time highs, but we are increasing, which is, again, a very good sign. Shows that TradFi participation is coming back. It wasn't just I want to play the event and leave the space. Additionally, what's not shown on this chart is option open interest is also growing quite a bit, both in ETH and BTC. And, I think that makes sense with such a volatile asset. If you do have a longer term view, you want to buy some convexity, given implieds, are relatively low where they've been, in years past. It's makes sense to kind of play it that way as well.
Yeah, interesting. And I agree. I feel like, and we're very lucky in the position we hold, like from an client perspective, like the large institutions are very interested still, which is great, and they remain engaged and can want to continue to learn and things like that. So certainly seeing good momentum there. Is there anything, I guess, that is worrying to you, just to kind of have a balanced?
That's what we do. We worry. Yeah, I think we have this conversation on the desk quite a bit. Like, what could derail this? And I think we saw a little bit of it this morning with a good CPI print, but higher than expected. And I think the big risk is inflation doesn't come down the way we all hope and expect it will. The cuts have been, the market expectation for when they're going to happen has been pushed out. I think Citigroup even said that traders aren't pricing the potential of a hike as they should be. So, really, that's what kind of worries me. We got so bulled up on this soft landing narrative, early hikes. Crypto's now has, it's benefited from that a bit, but it's also benefited from its own narrative, which has been the ETF. But I kind of worry about, if the macro environment isn't as welcoming as we hope, that could certainly create some issues for our market.
Yeah, that makes a ton of sense. And just to be clear, we don't sit on the desk thinking about negative things all the time, but just occasionally, just to make sure that we look at the tails.
You have to be balanced, though.
Yeah, very true. Very, very true. Sid, over to you. What is going on in Web3? And I guess we'd love to find out how Farcaster is going post last week's update.
Yeah, it's pretty interesting. The numbers are not increasing at quite the same rate, but still staying pretty high. Several 100,000 active users per day, and what's interesting, especially this week, is the team has pushed through a PR that can be seen in their public repository for Solana accounts to be added to the Farcaster account base. So, which is interesting because largely Farcaster has been very EVM, ETH centric. Most notably, Base. 60 to 70% of Farcaster on-chain transactions are on Base. So, adding Solana as another ecosystem potentially opens up a pretty big wave of new users and new developers as well, who can potentially integrate interesting social experiences using Solana accounts and Solana on-chain transactions. So that'll be an interesting development to see how usage picks up once that feature is rolled out.
Do we have a timeline for that?
Not specifically, but potentially this week or next week, we're looking at that. The code has been merged and it's more about how it's released.
Very cool. And are there any like big names that have moved across or started being active? Obviously, like Fred Wilson's and Chris Dixon's and Vitalik's have been around for a little while. Is there anyone maybe that crosses across into Web 2 that has moved across yet?
Yeah, the trend I've been noticing is actually very interesting crossovers from Web 2 development. So the co-founder of Obsidian is on there, the founders of Twitter, the kind of founder of Medium, the founder of .env, the Node.js package. So a lot of high-profile developer talent that have made pretty substantial contributions to Web 2.0 and the web as we know it are on Farcaster as well, posting interesting content in these channels that they have. So channels are kind of a pretty interesting discovery mechanism to touch base with people who normally have hundreds of thousands of followers on Twitter or other networks, but only a few hundred on Farcaster. And so it's a very early grounds to interact with these people.
Yeah, super, super smart. I always find that such a good leading indicator, like smart engineering talent. And especially those that have been successful and then get a really good global view. For them to be moving in, I always think it's so bullish.
Absolutely, 100%.
Very cool. What else is going on in Web3?
In Web3, I think the other big aspect, I personally had a few conversations with teams developing these AI projects, AI coins, notably OLAS and Tau, BitTensor. What's interesting from this perspective, obviously the narrative is pretty hot at this point with the traditional AI names and TradFi moving quite so much. But what's interesting is how these tokens kind of capture value. I think that most of these teams are working on staking mechanisms to see how the token itself can capture more of the flow of the network and then rolling those out over the next few months. So that's kind of the big development from that front.
Very cool. And for those that haven't seen it, we did a breakfast with Render a couple weeks ago now, and it was recorded for a podcast as well. So definitely check that out. And just in general, if you want to be attending Coinbase events, just reach out to your salesperson. We have various events with ZK Sync, Render, Scroll, etc. So do let us know, and we can get you a seat. Awesome, Sid. Thank you very much for that. Thank you to the rest of the team. As always, so much going on. Always a lot of fun. And we will see you all next week. Good luck out there.